are coming in on the F&O side of things as well. Pranoy, what are we seeing in terms of indicators there?
Well, one thing really stands out for the December series that the bears are most certainly sitting on great deals of premium because you've seen the kind of premium fall that we've seen on higher call contracts of 17,700 and beyond till 8,000. You've seen a big fall in those premiums. All that premium has been eaten into because of the kind of call writing pressure that we have seen session after session. There has been aggressive call writing. In fact, just an interesting stat, as Priyank was also mentioning yesterday, just one session of all these sessions in December has ended in the green. And as far as the December series is concerned, only 2 sessions is where we saw advances. So that severe call writing pressure, that premium being eaten into. On the lower put side, you have 7,700 put, 76, 7,500 put. All those premiums have soared only in the last 6 or 7 trading sessions. So lower put protection buyers are also making a lot of premiums. I mean, premiums have almost doubled from levels of 117 to over 250 at levels of 7,700 put. So that is one interesting move that we have seen. It's been a really weak series as far as the December series goes. 370 point of a correction from the high of the December series, which was attained only on the 2nd of December. In consonance with the fall we saw yesterday, the VIX has also started to spike up 4.7% higher at levels of 16.7. And the put call ratio remains at lower levels of 0.78, which brings me to the kind of ratio of open interest that we are looking at as far as FII exposure is concerned. There's greater call writing that has been happening as opposed to put writing. And in yesterday's session, the open interest exposure as far as put long positions are concerned has also gone up. So you cannot discount the fact of lower put protection also being bought at this stage, given the fact that you are seeing the kind of surge in premiums as well. So it makes that really profitable. If you talk about index futures and index options, a similar trend has been seen, although the quantum today is really less. 123 crores of a selling coming in as far as index futures is concerned, and a buy number of 27 odd crores as far as options is concerned. But you are seeing that options and futures hedging that has been going on as far as FIIs go. Certain stocks in focus, the breadth was on the negative side in favor of the declines. I mean, you had delivery based buying in counters like India Bulls Real Estate 32% compared to the traded quantity, Biocon 50% compared to the traded quantity, and Power Finance Corporation 42 to 43% deliverable compared to the traded quantity. On the sell side, you had CESC, IDFC as well as Glenmark that saw heavy delivery based selling in yesterday's session.
All right, Pranay, thanks for getting us those updates in terms of what we're tracking. I just pull up the SGX Nifty before I get some perspective on the currency from Mitali. The SGX Nifty is indicating a little bit of a rebound in terms of the way trade's panning out. There you go, 7 to 8 points higher. So yes, you've gone into oversold territory. You've seen a sharp cut as far as markets are concerned, and the SGX Nifty seems to be highlighting that as well.